Hey everyone, and welcome back to The Silver Show, brought to you by C. Ivor, the only silver dealer that lets you lock in real bullion with just 15% down. I'm Bob, and today's episode is all about a powerful but often overlooked tool that smart investors have used for centuries, the gold to silver ratio, or GSR for short. We're going to break down what it is, where it comes from, how it's used today, and why a ratio over 100 to 1 might just be your biggest buying signal yet. Let's dig in. So what is the gold to silver ratio? It's simple. It tells you how many ounces of silver it takes to buy 1 ounce of gold. If gold is $2,000 and silver is $20, that's a GSR of 100 to 1. Why should you care? Because this ratio can signal whether silver is undervalued compared to gold. When the GSR is high, like it is right now, it might be telling you silver is on sale. A GSR over 100 means silver is historically dirt cheap, I always say at the shop. It's not just undervalued, it's being ignored. The gold to silver ratio goes way back, like Old Testament back. In ancient times, the ratio hovered around 10 to 1 or 15 to 1. In the Roman Empire, it was fixed at 12 to 1. During the U.S. founding in 1792, Congress set it at 15 to 1. That held for nearly a century, until 1873, when silver got demonetized. Then gold took center stage and the GSR started to drift. Fast forward to the 20th century. After the Bretton Woods system collapsed in the 1970s, the ratio was no longer fixed, and it's been market-driven ever since. Today, we've seen it spike above 100. During COVID, it actually hit over 120 to 1. Let's be clear. For every ounce of gold, you could have bought 120 ounces of silver. That's unheard of. Alright, so it's a number with a lot of history, but how do people actually use it? Great question. Savvy investors use the GSR to time their trades between gold and silver. When the ratio's high, they buy silver. When it's low, they swap silver for gold. Let me give you an example. Say you have 1 ounce of gold. If the ratio is 100 to 1, you trade that gold for 100 ounces of silver. Now let's say a year later, the ratio drops to 50 to 1. You could take your 100 ounces of silver and trade back into 2 ounces of gold. That's a 100% gain in gold. It's one of the smartest ways to grow your metal stack without putting in any new cash, I tell customers. Just trade the ratio. People also use the GSR to rebalance their portfolios. If silver drops in value relative to gold, they buy more silver to restore balance. And when silver outperforms, they sell a little off and pocket the gains. So let's talk about this 100 to 1 thing. Is it normal? Nope, not even close. Historically, the ratio lived between 12 to 1 and 20 to 1. In the last few decades, it's ranged from 40 to 80. But 100 to 1? That's rare air. That kind of extreme ratio usually happens when the market's in crisis, when investors are fleeing to gold for safety and ignoring silver altogether. But here's the thing. Those gaps don't last. The ratio almost always comes back down. And when it does, silver tends to run hard. Silver isn't just a precious metal, it's an industrial powerhouse. It's used in solar panels, electric vehicles, semiconductors, even medical gear. The solar industry alone is now using over 100 million ounces of silver every year. And that number's only growing as the world moves toward renewable energy. Meanwhile, silver supply is tight. It's not mined on its own. It usually comes as a byproduct of other metals like zinc and copper. That means production can't just ramp up when prices rise. Put that together. Booming demand, tight supply, and an out-of-whack GSR, and you've got a recipe for silver to close the gap in a big way. So what happens if the GSR comes back to earth? Let's say gold is at 2,300 an ounce. If the ratio falls to 50 to 1, silver goes to 46. If it drops to 40 to 1, silver hits $57.50. And if it somehow returns to the ancient 20 to 1 level, silver would be pushing $115 an ounce. That's not a forecast. That's just math. But even conservative analysts think silver could double from here if the GSR normalizes. Silver doesn't move often, but when it does, it moves fast, I remind folks. It's the sleeper metal that explodes when it wakes up. So what did we learn? The gold to silver ratio has been a key signal for centuries. A GSR over 100 is rare and often points to an undervalued silver market. Smart investors use the GSR to rebalance portfolios and trade between metals. Silver's got strong fundamentals thanks to industrial demand and tight supply. And if the GSR reverts, silver could see major upside. If you're stacking silver now, you're not just buying metal, you're buying a value gap with centuries of history behind it. Want to get started? You can lock in today's price on silver bullion with just 15% down through our layaway program at C. Ivor. Stack smart, and don't let this ratio run away from you. Thanks for tuning in. See you next time on The Silver Show.